Will Bitcoin go parabolic, seeking price discovery at new all-time highs, or is a bull trap in the making? Let's discuss. If you are new to the channel, our daily updates are short-format summaries of our market perspectives and trading strategies. We are a team of investment professionals leveraging our careers in traditional finance as traders, market makers, and portfolio managers for top-tier institutions, having transitioned to proprietary traders of digital assets. We have developed a methodology combining qualitative and quantitative factors, merging a multitude of theoretical constructs. Our approach translates how the pricing mechanism is influenced by market maker predatory tactics and trading algorithms with a focus on market structure, liquidity, volatility, and time-price volume relationships. Please note, our content is not investment advice, or is this an educational channel. It is intended for entertainment purposes only. If you suffer from analysis paralysis and prefer short-format market perspectives and rationale for our trade setups, stay tuned and enjoy. Overnight, the Asian session opened with an open drive impulsive price action as high as 71.4 thousand after flipping the key 69.5 thousand level to support late in the New York session. Price is currently consolidating below the 71.4 thousand key level, which is the highest monthly closing price this year, set back in March. Momentum in yesterday's session was supported by a robust net $473 million inflow into Bitcoin ETFs. This on the back of net inflows for 9 of the last 10 trading sessions. Also supportive is open interest in futures markets rising to unprecedented levels. Sentiment indicators reflect the constructive backdrop with the crypto greed and fear index in greed, and an increasingly positive call-put ratio in volatility markets, as speculative out-of-the-money calls are better bid to out-of-the-money put buyers of protection. Market structure is bullish both locally and on longer time intervals. Market positioning is also net long, and on-chain metrics show all cohorts, short to long-term holders, in profit. Aforementioned factors support a continuation to the upside. However, they simultaneously increase susceptibility to disorderly corrective price action to the downside from market maker predatory behavior. Additionally, participants in volatility markets are short gamma, which can exacerbate price action to the upside or downside if they become forced buyers to cover their short option positions, particularly if implied volatility rises, which is particularly noteworthy in the context of upcoming event risk from the US presidential elections next week, as well as US economic data this Friday. This while geopolitical tensions are rising, with North Korea joining forces with Russia in the Ukraine conflict and flashpoints between Israel and Iran increase in frequency and intensity. All things considered, the market backdrop balance of risks have binary investment implications, and the distribution of outcomes is correspondingly flatter than normal due to tail risks. Translating investment implications into strategy, we maintain a long-term bias to upside prices, with our model projecting Bitcoin price above 80,000 by January month end. However, price action is never linear, and as mentioned, risks to the downside exist, which may be exacerbated by consensus, long market positioning, high complacency, and profit-taking. For this reason, we have opened protective puts to hedge risks to the downside. Our trading plan is to scale into longs at key levels to the downside, where our model identifies as points of interest for both large participants and algorithms due to multiple technical confluences and liquidity characteristics. These levels are 68.3 thousand, 63,000, and 61.5 thousand. In the scenario where price continues to the upside, concentrated liquidity residing above 72,000 from liquidations could propel Bitcoin to new all-time highs if triggered. An ascent above this level will then enter uncharted price discovery territory, to which we will closely monitor time-price volume relationships and real-time absorption for indication of exhaustion or continuation. In volatility markets, we are monitoring implied volatility going into the US elections, as there may be opportunities to sell option structures which harvest volatility premia, particularly in the scenario of a gamma squeeze. As always, do your own research and analysis. Be safe, and good luck in trading.